If your income is over $1 million a year, you have properly assumed the qualified business income deduction, or QBI doesn't apply to you. But under the big beautiful tax bill, Congress didn't kill QBI. They revived it and built a pathway for top earners to qualify again. This video is for business owners, professionals, and investors who make serious income, 7 figures or more, and want to legally engineer their way back into the 20% deduction. Here's how we will break it down today. 6 parts that you want to stay for. First, what changed under the big beautiful tax bill, which is TOB3, and how the new safe harbor works. 3 real client examples that you can relate to, and 4 step-by-step strategies to qualify. 5th, long-term planning beyond 2026, and 6th, common pitfall and what not to do. Stick around until the end because we will talk about how to stack QBI with other deductions, and that's where the real 6-figure saving happens. Let's start with what changed. So after TOB3, the QBI deduction was designed mainly for small business owners. But if you were a high-earning professional like doctor, lawyer, consultant, financial advisor, your deduction completely phased out around $4,400 for joint filer. That's where most people stop. I'm too successful for QBI. But the big beautiful tax bill changed the landscape. It's expanded eligibility for professional service business that can document real operations like wages, assets, or direct participation. It's raised phase-out limit to roughly 1.2 million for joint filers. It creates a high income safe harbor even above those limits. If you meet certain weight and property tests, you can still claim QBI. And finally, it makes the deduction permanent. No more sunset after 2025. So now you might be wondering, okay, what does this look like in real life? How do people over $1 million actually qualify? Let's move into some examples so you know exactly how it works. Ms. Dr. Carlos, a physician in Austin, Texas, his medical groups net about $1.2 million a year in profit. Under the old law, he got 0 QBI because medicine is a specific service, trade, or business, or SSTB. Here's how we fix that step by step. Step 1, we split his operation. Ramesh Medical Group is an S-Corp, handle patient care and billing. Ramesh Management LLC handle HR, payroll, equipment, leasing, and administration. Step 2, the management company had its own staff, payroll, and real assets that wasn't just paper. Step 3, that LLC now provided admin services to multiple medical services, including his own. Under TOB3, new safe harbor, this management company produced qualified business income is about $182K worth, even though his main S-Corp didn't. So step 4, that turned into about $36,400 deduction, saving him about $67,000 in taxes for 2025. And this isn't just a loophole, it's a strategy. It's about running your operation like a real business with documentation, payroll, and contract. Next, let's unpack how the safe harbor actually works, what tests you need to pass. Let's come to part 3. So the safe harbor is built around 3 tests. You need to meet at least 1 and ideally all 3 to make your QBI bulletproof. Let's go through them one at a time. So test number 1 is the W-2 wage test. You must pay qualifying wages. The IRS formula gives you a deduction equal to the lesser of 20% of your qualified business income, or the greater of first 50% of your W-2 wages, or B, 25% of your W-2 wages plus 2.5% of the unadjusted basis, which is UBIA of qualified property. So here's some step-by-step. First, you want to pull out your 2025 payroll report. 2, add up W-2 wages that paid to employee. 3, if you are an S-Corp, pay yourself a reasonable salary, not excessive, not zero. 4, calculate where your wage level, optimize your QBI deduction. So test number 2, so the property test. If you own depreciable assets like computers, equipment, real estate, their cost basis counts toward the formula. Keep record of all business assets and their purchase dates. Don't mix personal items. Maintain depreciation schedules. Test 3, the active participation test. They show the IRS that you are running a real trade or business. That means separate book, contract, EIN, payroll, and business bank accounts. When you meet the test, you open the door to QBI again, even if you are making over $1 million. So now let's move from the technical side to the practical. How do you build your plan? So let's go to part 4, strategy blueprint for 2025 and 26. Think of this section as your QBI comeback plan. So engineered for top honor. Here's how to design your business to qualify step by step. Step 1, split functions. So not professions. If your work include both client services and operation, you want to separate them. For example, a law firm might keep legal work in an entity and administrating services in another. Step 2, payroll the right way. You can't skip wages and expect QBI. You want to pay yourself and your staff through payroll. Make sure it's documented and filled with proper W-2s. Step 3, track every asset, like computers, office furniture, real estate. Those are QBI boosters. So your CPA will need their cost basis to calculate your deduction. Step 4, review your NAICS code. So sometimes your industry code determines if you are seen as an SSTB. For example, like medical administration isn't the same as medical practice. So small changes can make a big difference. Step 5, run models before you file. Don't guess. Run what-if simulation before your 2025 return go in. So ask your CPA, what if I buy new equipment? What if I adjust my salary by 50%? Every scenario shifts your QBI income. Now that you know how to structure your 2025, let's look ahead, because what happens after 2026 change the math even more. So now let's start with part 5, planning beyond 2026. Here's what's coming. When the current rate expires after 2026, the top tax bracket jump from 37%. So that means your 20 deduction become even more valuable because it offsets a higher rate. So step 1, lock in your structure now. The earlier you establish entity and contract, the stronger your position will be at the lordship later. Step 2, build capital strategically. The property tax reward ownership of depreciable assets. Step 3, ultimate compliance. Keep digital payroll and depreciation logs. Expect more QBI audits in 2026. Step 4, stack deduction. You want to combine QBI with retirement contributions, accountable plans, and charitable giving. But while planning ahead, make sure you are not falling into traps. Let's talk about what not to do and the mistakes that kill the deduction faster than anything else. Now let's talk about part 6, which is mistakes to avoid. So here are the top 5 QBI killers for high earner. First, running everything through one LLC. You lose cost separation and clarity. 2, paying yourself too much salary. It wipes out your QBI base. 3, using business property personally. Destroy audit defense. 4. Failing to document payroll and depreciation. 5. Creating fake management entities that don't perform real services. Each of these mistakes disqualify your QBI, even if your number looks perfect on paper. To wrap this up, let's connect everything: how the QBI, safe harbor, big beautiful tax bill, and good planning all tie into your larger wealth strategy. The big beautiful tax bill did not take away QBI. It simply raised the bar for who qualifies and rewarded who operate like real businesses. If your income is about $1 million, you don't need to earn less to qualify for QBI. You just need to structure smarter. Here is your reminder of what we have covered today. First, what changed on the big beautiful tax bill. 2. How the new safe harbor works. 3. Real example like Dr. Ramesh and others. 4. The step-by-step structure to qualify. 5. How to plan beyond 2026. And 6. The pitfalls to avoid. If you take one thing away from this video, it is this: the 20% QBI deduction isn't gone. It's waiting for those who build intentionally. So treat your business like a business. You want to structure it, document it, execute on it. That's how you turn big beautiful tax bill safe harbor into a lasting tax advantage, one that could easily save you 6 figures every single year. Thank you for watching. I will see you at the next update.